Hey everybody, welcome to the daily update for Tuesday, April 14th, 2026. Happy Tuesday. All right, let's take a look at the market. Get tough darts out of here. So, SPX back online from TradingView, thank goodness. And what happens today? Well, let's go back to what happened yesterday. Yesterday was a fantastic day. Started off down a little bit. I walked through the whole technical framework here. It was a beautiful day technically, and we closed literally at the highs of the day. We had a ramp in the futures overnight. We gapped up and we just went, and look at this spread. You know, it continued from here. It never came back together. It just went. I mean, what a beautiful spread between the 20, the 9, and the 5. And look at this. We can't even close below the 5, the shortest intraday EMA, until 8:05 Pacific time. And we barely closed below the 9. I'm not even going to call that a close below the 9 until almost 10 o'clock Pacific time. And then what happens? That 20 becomes support. And then we started to roll over a little bit. And people are like, okay, maybe it's time. This rally is getting a little bit long in the tooth. We need to pull back. But nope. We bounce here. We put a little higher low in there. And there was some news about NVIDIA. The point is, we closed at the absolute highs of the day. Where does that leave us? Well, we're going to go through this whole thing in just a minute. What did I do today? I'll tell you what I did. I trimmed a couple of positions. So I don't know if you remember on this day, but this is the day that I said I'm going to start putting my, for lack of a better word, blood in the streets. You know, the Sir John Templeton saying, buy when there's blood in the streets. I started put the blood in the streets account to work. And that is chopped up in either 4 or 5 tranches. You put them in very slowly. And you don't worry about it, and you just wait for the market to rebound. Well, I never even got to put the second tranche in because we never got low enough to put the second one in. So basically, I bought SPY here today. I unloaded it. I actually got stopped out right here. So that was a nice move. And then the other thing that I did today was I closed out a position in Qs. Did the same thing. That's where I bought it there. Same day as the SPY. And so bought it at 5, it was like 578, 579. Closed it today when it broke here. So 626. So that was nice. I like that. So let's take a moment and talk about the Bears, because I think I'm going to call it. I think it's official now. The Bears have lost again. Did we hit all-time highs? No, but we got within 1/5 of 1% on the SPX. And here's the point. There have been so many opportunities on the long side in the last 2 weeks. Is every stock back to its all-time highs? No. Are some stocks still beat up, including the software stocks? Yes. But it's not about being right or wrong. It's about making money. And here's the thing that I don't like about perma bears. There is something structurally wrong with their outlook. They don't understand markets. They don't pay attention to history, and they deny reality. And the biggest problem bears have is they won't be happy until everything goes to zero. And that means they stay at the party way, way too long. I wrote an article about this back in the midst of COVID. This was in early April of COVID. And I entitled it, "The Problem Bears Face Right Now." And I won't go through the whole thing, but the general concept was, you ever know somebody that stays too long at the party? Like the party's winding down and everyone's leaving, they're kind of hanging around, and you start, doing that, it's getting late, and you're cleaning up and you're putting your pajamas on, and they're just like, hey, you got any more beer? They just hang around too long. Bears get a 5% pullback, a 10% pullback. They even get a bear market, but they want more. When I wrote this article, here's where the market was at. I wrote this article on the Sunday after this Friday bar. And what had happened, right? This is when we dropped during COVID, and we went all the way from these lows and we rocketed back up here. we pulled back in a fairly orderly way and put this very tight inside bar here. And I wrote this on this week and I said, the bears have a problem because they're hanging around too long. They got their pound of flesh. They got a lot of flesh. They got this 35% pullback. We pulled back 35% from the highs here, and they still wanted more. They still wanted to hang around. And what happened that following Monday? We ripped, we broke this little short-term trend line, and then we spent the next few months and then years after that ripping the bears' faces off yet again. So that's why I am not a big fan of the bears. We watched in real time over the last 2 weeks as the technicals went from bearish to bullish. And the bears kept saying, no, you don't understand. That's a counter trend rally. And here's all these reasons why we won't get back to all-time highs. And yet in real time, we identified all the factors that have to go into a change of trend. You stop going down. You get the oh shit bar. You start recapturing support and resistance levels. You recapture moving averages. You put in higher lows. You have more productive chart patterns. We do this over and over and over again. We watch for all these steps to build upon each other. And when they're building and we're talking about this and saying things are getting better, the bears are going, no, you don't understand. We're losing the Iranian war or whatever the excuses for the day. And I hate it. Now, look, to be fair, I hate perma bulls too, because whether you're perma bull or perma bear, you're not using a process, a methodology. You're not managing risk. You're just going, I believe in bearishness. I believe in bullishness. Here's the difference between perma bulls and perma bears. At least perma bulls have history on their side. Want some proof? Look, IWM, 2000 to now, up and to the right. NASDAQ, 1985 to now, up and to the right. SPX, 1871, up and to the right. And how about the Dow Jones? 1897, up and to the right. Have we had times where we pull back? Of course we do, but we always resolve to the upside. Sometimes it takes weeks, sometimes it takes months, sometimes it takes years, rarely it takes decades. But the point is, the trend of the markets is the trend of the United States of America. It just is. I'm sorry. I don't want to be too jingoistic. I don't want to be too rah-rah, but that's the way it is. If we lived in the Netherlands and this was how the chart looked, I would say the exact same thing. So I just get really upset with the bears. And that's okay because, we need someone to trade against. We need someone to take the other side of the trade. Just look at some of the names that have ripped face in the last few weeks. These are things we've been talking about in the daily update for subscribers. Look at Nebius, face ripper. Look at Amcor, face ripper. Look at Amazon. Let's all say it together. Face ripper. Look at Wolf, face ripper. Now, unfortunately, it's down a little bit in after hours on an offering, but you had plenty of opportunity to take profit here, right? Look, the thing that makes this even crazier is these aren't even names that I've put on our watch list. These are names that I've just been pointing out because they never really set up, at least not in the way we like them to set up for the daily watch list. But we've had tons of names come on the daily setups and then go over to the active list, and they're still on there right now. So anyway, let's take a look at this amazing market because it truly is a thing of wonder, I have to say. Like they talk about like chart porn or chart art. There's some really good chart art here, and we'll just go through all of it.